Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Akmir with the Bulletin Board Heroes on Tuesday, March the 24th, here on Share Talk and sponsored by the UK Investor Show. Starting off with a stock which is not normally the type of animal that comes here on the Heroes, but 888 Holdings are revived by thoughts of people spending time at home gambling on the quiet, presumably. We've got a line of resistance there at 114, which has just been hit this morning. End of day close above that, or a weekly close above the 50-day moving average, could take the shares up towards the main post-November resistance at 160, 170 plus. Stop loss at this stage, which is basic for the favored area, would be support on the way down around 102, down to today's intraday low near the 100 pence level. Obviously, that's quite a big stop loss, around 10%, but the upside looks to be towards 50%, so maybe that is acceptable to some. On to a stock which is in an area which is currently, I suppose, flavour of the month, one could say. EKF Diagnostics. Interesting here that we've had a massive gap to the upside here through the previous peak at 23 pence just earlier in the week, and above 23 pence looking for a return to the main post-December resistance at 36 pence. I suppose if you're cautious on the stock, you might wait for the shares to break back above the 50-day moving average, but that's such a long way away, it's easier to play really with that the gap down to 23 pence and look for any dips towards that area to buy into. At this stage, only back below 20 pence really kills the idea of sustained recovery there. Oil stocks not exactly been a great situation in the recent past, but there's some signs of green shoots here, especially the green candles at Hurricane Energy. Still needs to break 14 pence, which is a line of resistance from February on a broadening triangle base that the shares have got. And if you're cautious on the stock, you might want to wait for RSI 50 to be broken as well, versus 46 at the moment, and even the 50-day line at 16 pence. But the trigger level at this stage looks like 14 pence, and above that we could head back towards support on the way down, which is 25 pence. Admittedly, a very punchy call in current market conditions. Back below 10 pence would certainly, though, kill the idea of a sustained recovery here. A bit of chit chat on the on Twitter at the moment regarding inspiration healthcare, not inspirational, inspirational healthcare. Here it looks as though finally, after a lot of jiggery pokery, there's going to be a breakout here. We had a false breakout and came right back to the support area, which was a very painful thing to do for a stock or a market. But the view at this stage is probably clearing 75 to 80 pence on a weekly close basis could be enough to take the shares up to the top of a rising July 2016 price channel as high as 100 pence over the next month or so. Another stock where there's chit chat on Twitter is Modern Water. There was a failed attempt to break to the upside in December. The shares sort of dribbled over that resistance line and then came back to make new lows. This time, though, it looks more serious, both in terms of the way the shares were very, very oversold last week, down to around the RSI 10 to 15 level. What we're looking for here now is a clearance of this resistance line from January, and if we can get that through the 0.6 pence level on a end of day, end of week close basis, the shares could head back up towards the initial February peaks at 0.9, which gives you a reasonable risk reward from this point. Only back below 0.5 pence today's intraday support zone, really killing off the idea that modern water would break out over the near term. On to a stock which used to be a favourite here on the Bulletin Board Heroes, not so much in the recent past though, but Orosur Mining nicely turning around with a bear trap gap reversal. Needs an end of day close, I suppose, through 2.4 pence to prove its credentials. We get through that over the next day or two. A retest of the main resistance area, 3.5 to 4 pence, could be on the cards for the sometime by the end of April. Finishing off with another in fashion type of stock, comes in the form of Shield Therapeutics. Here we've had a massive green candle here, very, very impressive indeed, breaking that initial, that post gap high there around the 58 pence level. While we're above 58 pence, looking to fill that gap up to 100 pence at least over the near term. You can see how oversold the shares got during March with the two breakdowns that we had for the shares, one towards 130 and the next towards the 40 pence level. So above 58 could be a reasonable recovery there for Shield Therapeutics. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.